Hi, I'm Jermaine, co-founder of the Learn, Grow, Invest community. Today, we're going to be reviewing Carib Cement Company Limited. We're going to do a full review and analysis. We're going to look at the annual report, the 6-month report. We're going to look to see what the price history has been like year to date. And then we're going to talk about some of the news that has been, surrounding the company in the past few weeks. We're going to talk about, what this may mean for the future of the company. So this should be a very good video. Let me know if you have any question in the comments below, and let me know which stock you'd like me to review next. So we're going to start with, as I said, an overview of the company. I always start with that to explain what the company does, just in case it's the very first time you're hearing about them. Then we look at some highlights for the annual report for 2020. We're going to look at the 6-month financials. We're going to just highlight some key things that I thought were interesting upon my review. Then we're going to look at the price history year to date. Now, Carib Cement started the year at about $67. Today, at the end of trading, it was, I believe, $94.50. So that's quite a big increase from the start of the year. So we're going to look at that, how that has been trending, and talk about whether or not there should be, any news or sentiment surrounding it that may push that price higher. So I wanted to just share this disclaimer. Now, the information reviewed here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell Carib Cement Company Limited. I am not a licensed financial advisor. So we're looking at the 2020 annual report for Carib Cement, and I'm going to go through the highlights. We're not going to go through the entire report. If you're interested in doing that, I'll have the link in the description for you. Feel free to go through it. Take your time. If you're interested in the company, it's always a good idea to go through the annual reports yourself. Reports, we focus on a few things. Company overview, we focus on the MD&A, that's the management discussion and analysis. Typically, if there's a 5-year summary or a 10-year summary, we'll look at that, at least the last 3-4 years. And then we may look at some key things from the financial statements. So those are the areas we're going to focus on for this. So I went ahead and highlighted some sections in advance. So I'll only focus on those. And if there's anything else, as I said, you may want to go through that on your own. Now, Carib Cement is a publicly listed company which has been in operation since 1952 and is the sole manufacturer of Portland and blended cement in Jamaica. Right? And Carib Cement Company Limited is a member of the TCL group, of which Cimex SAB.CV is the majority shareholder. And we'll look at the shareholdings in a few minutes, right? So in terms of Cimex now and who they are, they're a global building materials company which delivers high quality products and reliable services to customers and communities across the world. Now, I actually went through the financial statements for Cimex. I actually recommend that you do that as well. It's always a good idea to understand how well the company is doing as a group, because that gives you an idea as to maybe the strategies, maybe some of the practices may come over to this one. So it's always good to track the parent companies. So the chairman is here highlighting, just the exceptional year that they've had. So they would have, achieved a net income of 3.2 billion compared to 1.9 in 2019. And they would have increased their shareholders' equity to 11.5 billion, up from 8.3. And they saw extremely strong demand locally, which drove revenues to 20.1 billion, up from 17.8. So just bear in mind that that's in a pandemic year. And all right, so we're looking at the MD&A now. And, this is from the managing director. So what I typically do here is just go through the things that, look interesting to me, that stand out to me. So if you go through it, you may see something else. But these are the things that stand out to me that I think if you're going through the report, there are some things where there are typically notes at the end of the report that would speak to some things in the financial statement. So for example, if there's reference to a line item, there's typically a number, and that number, you can go to the end of the document to see what to see and the details or description of that line item. So it's saying here that, they activated, based on, COVID-19, they activated a rapid response mechanism, arranged for administrative staff to work from home, and implemented a raft of adjustments, including cash preservation, cost control, and suspension of CapEx projects, right? So they were focused on just ensuring that they maintain their cash. It speaks here about, their plan for their employees. I'm going to skip past that. And again, here, the historic performance of 940,000 metric tons. Let's look at what the market overview says here. So it says domestic cement demand increased by an estimated 9% over the previous year. And we see that really from how, we're seeing a lot of construction projects going up. It's actually, I don't remember a time where there has been so much. We saw the news the other day that I believe it's Usain Bolt launching another building. We know that the Cygnus project is there. We've seen, if you drive around the Kingston and corporate area, you're seeing a lot of development, a lot of new buildings going up, apartments going up. So definitely we see where demand has grown. It says here some major infrastructure projects were put on hold while civil engineering and private residences accelerated. And, that's pretty much what I was alluding to. The company's position is to continue supplying the local market while monitoring opportunities overseas in order to take advantage of the opportunities if conditions are favorable. And actually noted that their exports, they're pretty much down. So based on the fact that they were able to do so well in terms of revenue, should they start to look for external opportunities, or should they present themselves, they're actually, standing to benefit more in terms of revenue there. And pretty much local demand is especially high. And that's what we've seen from the 9% increase. In terms of the macroeconomic outlook, so it says that the economy would have contracted by 9.9% in 2020 after 7 years of growth, and the manufacturing sector declined by 5.4%. So companies like L.E.A.R.N would be those in the manufacturing sector. And if you want to have a good overview of the companies in this segment, you can look at maybe a fund like Select M. It has the index of all the manufacturing companies, in case you want to see what those are. Right. And it's, spoke to the hope of, vaccines being rolled out and, there being some normalcy. We understand that there has been a delay, but I've seen heavy marketing in terms of getting the vaccines on the way. So the expectation is that if that's able to be rolled out soon, then it could have, things could start to pick up. So what they're saying here, they're estimating that things should get back on track in 2023, 2024. That's 2-3 years from now. So what that means in terms of what I'm seeing, if things are expected to recover in terms of the economy in 2 to 3 years, and these companies are doing so well now, it bodes well for them in the future that they may be able to do even better than what we're seeing now. So we're looking at the 10-year financial summary. So what they do on these pages, and I'll scroll through everything first. So from 2020 all the way back to 2011, but I'm just going to focus on the last few years. I think that just makes sense, right? So we see revenue has been growing consistently each year. Even the year before, where it was just marginally better, it's still an improvement. So from 3 years ago, they're almost 20% more in terms of revenue. Profit almost 4 times from 2017. Taxation, the more money you make, the more taxes you're going to be paying. Net profit is up almost 3 times, and they're showing on a per stock basis here, their EBITDA has been growing as well. So, everything is trending in the right direction. It's looking good. I wanted to highlight here. So, I'm going to share an article soon, but we see their debt, their long-term debt has been going down significantly. So 2 years ago, it was 11 billion. Now it's 4 billion. And in the most recent report, it's 500 million. So they've been significantly clearing their debt, which is an extremely good sign. Their overall total debt now is 6 billion, down from 15 billion 2-3 years ago. And what we're seeing here in terms of imported cement, that number would have gone down. In terms of production, we mentioned this milestone that they reached before, coming up from where it was a few years back. And in terms of cement sold, I believe, I was gonna say this total, let's look through and see if they would have exceeded that amount. So in terms of cement sold, I believe this is the highest number they've seen in their history, right? Which makes sense. If this is their max, then this is likely to be their max sold as well. So that's, all trending in the right direction. So I'm not going to spend a lot of time on these statements because I wanted to focus on the quarterlies. But let us see how they are in terms of their assets. So looking at the 2019 and 2020 financial years, so total assets would have been, a slight decrease there. The liabilities, though, are the areas that I wanted to focus on here because, again, I'm just so impressed that they would have, taken the approach of just aggressively clearing their debts and positioning themselves for growth in that way, in terms of just having more cash to expand and ramp up operations. So the year before, and we saw even the year before that, it was higher. It was 4.4 billion at the end of last FY for them. And so their total liabilities would have gone down, and their accumulative net income would have grown as well. Let's look at their net income for the year. We see the difference, that's almost 100%, not quite. We see net cash growing here. We see the long-term debt being paid off, and changes in working capital would have increased from the previous year. All right, and I believe that's it in terms of focus on this report. So let's go to the 6-month financials here. And these financials, I was able to find them on the Jamaica Stock Exchange's website. So you can do the same as well. I'll have the links in the description. So let's look at how they did up until June 30th, 2021. So for all of last year, this is their audited financial numbers. Their revenue for the entire year was 20 billion, and we see the 3 zeros here. So though it says million here, it's really billion. They've done 12.3 billion for the first 6 months. So they're on pace to exceed this. And again, would have seen that trending in the right direction, increase in demand, increase in the amount created, increase in the amount sold would lead to them having their best financial year. We also see net income being the same in 6 months as it was for the entire year last year. We see their EPS was 3.76 for the whole year. So earnings per share is calculated by looking at net income divided by the number of shares available. And it actually goes through the calculation in the statements here. Let me actually see if I can find it, just in case anybody is wondering how it's calculated. And I'm actually always, a good thing I checked here, these two notes here are referring to the loans that they have. So on would have been an unsecured revolving loan, and the next one would have been from NCB, which would have been a 5-year loan, right? So I just wanted to highlight that. I'm looking for where it shows the EPS calculation. I might have missed it, but essentially, I may just edit this out the video. But essentially, we take the number of shares outstanding over the net income, and we're looking at earnings per unit stock essentially. So for the entire year last year, it's 3.76. Now it's 3.63. This is a good sign. Again, it means there's growth in earnings per share if they're able to do this in 6 months versus for the entire year last year. And as I said, based on what their revenue is looking like after 6 months, they're on pace to do really well for this year. This is their income statement. Would have seen, again, comprehensive income for 6 months, just marginally lower than the entire year last year. This, I wanted to highlight their long-term debts, right? So this is coming from 11 billion. Now it's 500 million, right? So they are setting themselves up. That means the next quarter, or maybe the next 2 quarters, this debt is gone completely, which means more for their bottom line, right? That's what that means. And we're seeing, this is the 2021. So we're seeing in terms of liabilities, they're trending down 11 billion versus 14 here. All right. Let me zoom out and make sure I'm on the right page. Okay. So I highlighted some sections over here as well, worth noting. So these are just some highlights of the financial performance. So the increase in revenue, they're saying, was attributed to stronger domestic demand, and we see this, and I'm guessing that this will continue because Cygnus would have come out and said they are working on and expecting a whole lot of these projects to be coming on stream. If it's a building project, it's going to need cement, more revenues. So it says here, net operating earnings before other expenses for the period was 2.3 billion, representing a 41% increase when compared to the second quarter for the prior year. Would have looked at that as well. The increase in revenue and the company's efficiency in operating cost control have been a fundamental factor for the solid operating results. Right, and we would have spoken about their record year. Net cash would have been, an improvement as well. Yeah, so they would have been able to reduce their debt during the quarter and by 6.5 billion with the second quarter for 2020 when compared to the second quarter. I like to look at the outlook as well. So let's see what they're saying here. They're saying that they will continue to be responsive to market conditions and opportunities to improve their business performance. They are encouraged by the strong domestic demand and will continue to demonstrate the resilience and strategic planning necessary to meet unexpected spikes. Would have seen the other day where there was a report of a cement shortage. That was about 2 weeks ago. And I think last week they would have reported that they're back in production. There's no need to worry about the shortage anymore. So the investments made over the last few years have prepared them to capitalize on commercial opportunities. They expect continued buoyancy in the construction sector, driven by both government-initiated infrastructure projects and many private development initiatives. So the government now is also one of their key customers. So, whenever the government needs to build to maybe put up buildings or do repairs, if NHT is building a series of homes, all of these, initiatives would benefit Carib Cement. Let us see if I highlighted anything over here. All right, so we're looking at the cash flow statement now. So we're seeing where, I think I just went straight to the net cash, provided by operating activities. They would have alluded to that in the highlights earlier. We see the improvement as opposed to the same period last year. And this is the changes in working capital as opposed to the same period last year. All right, we're on the Jamaica Stock Exchange website and we're looking at the summary for Carib Cement Limited. Let me zoom in. Okay, so they would have started the year at $61 and at the end of today, $94.10, right? So we see Let's look at how they did for the day. They went as high as $97, as low as $91.90, and it opened at $93. And we see 18,000 units traded, and we see 806,000 units traded on the 19th, 1.5 million on July 30th, and the largest volume for this year would have been July 9th, 2 million units, a high of $94 for that day. So what we saw today in terms of volume wasn't actually that much, and I suspect it may increase throughout the week, because what I notice is that persons get the news at different times. So I may read something that may cause me to react on a Monday. You may read it on a Tuesday, you react on a Wednesday, and so on. So I've noticed that typically, trading would pick up between Tuesday, Wednesday, Thursday, peak on a Thursday, and maybe, we see some reduction on a Friday. It's not a, general rule, but just something that I've observed with some companies. What we're seeing here would be, over the last year, we have seen, so over the last 52 weeks, the max volume traded would have been 3.5 million. Shares outstanding is 851 million. And I did see reference in one of the news articles about potential share buybacks and an increase overall year to date of 49.82%. So that's, if you're a Carib Cement shareholder from the start of the year, you're very, very happy. If you're holding from last year, a year ago, it was $41. So you'd have doubled your money at this point. All right, let's look at what some of the news stories are saying. No, I actually went to their website. There's actually some good information here. So I bookmarked it on their website. We don't have time to go through, but I'll link it in the description. I wanted you to see this here. So this is speaking about, let me zoom in. Very hard to see, but it's saying by written resolution dated August 16, the board of directors approved the formation of a committee to lead the development of a dividend policy to direct the administration, declaration, and payment of dividends to shareholders of the company. Now, my suspicion is this is something that they're doing now because they've taken the time to get themselves out of debt, and now that they're about to have enough of a surplus, then they're in a position to pay dividends. Now, the last time they paid dividends was, let me reference this article by David Rose. They paid a 7-cent dividend in June 2005. That was the last time they paid dividends. All right, so this is an article by David Rose. Shout out to him. So I'm not going to go through these because these would have mentioned the highlights that would have had before. But he's mentioning here that they would have taken the time. Is this the one where he referenced them clearing down their debt? No, this one is not it. All right. So it's saying at the 2019 AGM, they would have mentioned that the company would have been on target to pay down its remaining debt by 2023. So that's their target, and they're actually ahead of that target, and would consider a dividend or share buyback. So, that's the last dividend they would have paid, and their stock price then was $14.50. So imagine if you've been holding from 2005. And so the debt repaid during the quarter would have equated to a dividend payment of $2.38 per share. All right. And I'm not going to look at the TT side right now. This is the next article about them spending $4.6 billion to increase cement production by 2022. So we're almost at 2022. So this would have been, something that's already in progress. So that's speaking to that. That bodes well for them again, because if they're seeking to improve production, it means they're expecting to increase output. Increased output means increased revenues. The last article that I'll link here is production back on track. by Garfield Myers, and as I would have mentioned, there was a story about there being a shortage, and it's just speaking to here the fact that their kiln is back in operation after what would have been a general shutdown. So that maintenance has been completed and they are back on track. So that would have been the 22nd, which would have been yesterday. So that's it. Hopefully you enjoyed this review of Carib Cement. I tried to keep the reviews within 30 minutes. So I'm just going to share now what I think is likely to happen over the next few months. Now, this is not financial advice. I'm just sharing my personal opinions. I think the dividend committee being formed is good news. Now, there's nothing that's guaranteed. Dividends aren't a requirement for companies to pay it. It's paid based on surplus. So, but the fact that they're forming this committee is a good sign. It means they'll come out with a dividend policy, and then with that dividend policy, they will say, well, we're going to pay dividends based on X amount of retained earnings. But that, if they're forming the committee now, my expectation is within the next 3 to 6 months, they're going to have the policy in place, which means maybe the quarter after they're going to announce the dividend. So it's not going to be an immediate thing. Now, we're not sure how far along they are in the process, but you can expect that to come up in the next few months. The fact that they're doing so well in terms of the first 6 months bodes well for them. Now, I generally don't like to worry about a target price for a stock. And I know this sounds weird, but what I find is that if you focus on buying good companies and you look at how the market treats them in terms of sentiment for that stock, because, for example, depending on where you go, so let me show you an example. I'll show you an example here. So I'm going to zoom into this Mayberry trade sheet here. So I look at this almost daily, right? It's actually this sheet that I use to update my stock prices. So based on Mayberry's assessment, this is trading at a PE of 15.6. The industry PE for manufacturing is about 17. So what this is saying is that there's room for, so it's below the industry average. That's one. They're projecting that the forward PE is going to be less, which means to Mayberry at least, it's undervalued compared to the industry average. So if they believe that it's undervalued, what that means is that they're likely going to come out with a recommendation at some point to say the stock is a buy, because that's how these things work. If companies determine that a stock is undervalued, then they're likely going to give you a recommendation to buy. What I typically focus on, depending on how I invest in that stock, I try to get in what I believe is a reasonable buying point based on how the stock has been trading. And the reason why I say that is that there are stocks who trade at ridiculous PEs and, what are trading at prices that persons think are overvalued, and yet they continue to rise. And that's because valuation is not an exact thing, and you can have different companies valuing different stocks in different ways. So I'm saying all of this to say is the outlook for Carib Cement is positive. They have things that are falling in place, debts are going down, profits are going up, demand is going up. Those are good signs for the company. The stock has been trading around the same price for the last couple of months. It means it's likely would have been, if there is enough of a catalyst now, it could send it on a run. Where that run ends, nobody knows. So, and that's why I don't like to subscribe to a target price or a set price, because if you see something now that says the target price is $95, but it traded at 97 today, you may not buy. And then 6 months from now, it may be 120 or 125, and you say, well, I thought it was, fairly priced. So you can't really subscribe to those things. You have to look at the company's track record, how well they're doing, what things they're putting in place to grow their business, to expand. And depending on your time horizon, make the best investment decision based on the information that you have. That's what I would say. But I'd be watching the news. I'd look to see if there's any analyst report coming out for the company. I did find one from Barita, but theirs was in May, so I didn't think it made sense to share it now, because at the point that they shared it, the stock was still in the 60s. It's past the price that they would have recommended. I'll still link it in the description though, just in case you want to look at it, because I still look at those reports based to see what the analysts are saying are the opportunities or the risks for the company. So those are things I would look at. So, in terms of Carib Cement, personally, I think there's opportunity for growth. I personally don't think it's too late to buy the company. I'm seriously looking at it to see how they perform for the 9-month financials. So I'm hoping that, if the 9-month financial comes out and they're close to what they would have done all of the previous year, then that is telling me that my assessments would be on the right track. And those are the kind of things I look for. So if you're looking for a target price, I would say, stick to the brokerage firms for that, because they are qualified and authorized to do so. I am not. So, this is just, as I said, for educational purposes. So let me know your thoughts on Carib Cement in the comments below. Is it a company you like? Is it a part of your portfolio? When did you, start looking at it? And let me know which stock you'd like me to review next. Thank you for watching this video. I hope to see you in the next one.